This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Hello investors and traders, and welcome to the weekly market report with Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And if you've been following along with the Market Guys weekly reports, you'll know that I leave the lines on the chart each week so you can see how accurate the forecasts were, and it'll give you more or less an idea of how valuable candle charts are as a forecasting tool. Now, as I zoom in here, you'll see that this diagonal line right there is what I drew from last Friday, with Friday being right here, and then we had Monday, Tuesday, Wednesday, Thursday, and Friday of this week. So my forecast was that the market was going to go up, and I had a target resistance point right here, right around 1425, where I said that's where we would most likely wind up. And as you can see, the Russell 2000 touched the line, went a little bit higher today, and then closed right back below the line. Now, what does this mean for next week? Well, there's a couple of things going on here that you really want to pay attention to. First of which is this long vertical line above the candle. It's called a shadow. So when you see a long shadow, such as this, over the body of the candle, what that does is it tells us that the buyers tried real hard to push it up, and they did, but towards the end of the day, the sellers came back with force and were able to push the buyers back. And we saw this happen last Friday, and initially the price came down before going higher like I forecasted. But if you look back, even here, your long shadow above the candle, you have a longer shadow above the candle here, you have a long shadow above the candle here, and in each one of those instances we had a lower market. So I do believe that we are going to pull back next week from this resistance high, and as a result of that, with the Russell 2000 being a more broad-based index, you'll have to know that this will have an influence on the rest of the markets. If you see here, this will be my forecast for next week, and I'm going to just bring it down to right around 1400. And again, this is a telltale sign that the sellers are starting to move in. Okay, let's look at the diamonds, which is the Dow Jones Industrial Average ETF. And again, I left my lines on the chart from last week, where on Friday we broke out of that resistance point, and I said that we would most likely move up a little bit and then start to pull back. And then again, that's exactly what happened. This target price is pretty much where we have the highs of Thursday and Friday, and now we're starting to pull back towards this support level. So if I remove all lines once again, I'm going to point out one other thing that will be a little bit more clear for you, is that we have a long stretch of green candles here. With the exception of that one doji, which is no color whatsoever, we have 1, 2, 3, 4, 5, 6 green candles in a row, and that's known as a stale green light. Eventually, what we're looking for here is a red candle to show up. Therefore, I think that the Dow is going to pull right back to the 20-period moving average, and I'm going to draw my support level right there as the target price. And so between the Russell 2000 and the Dow Jones Industrial Average, I think we're going to, again, pull back. Now, if we look at the spiders, ticker symbol SPY, which is the S&P 500 ETF, something a little different happened here. Now, again, my forecast was absolutely right. We moved up to my target, and then we pulled back. Today was actually the day we hit the target price. We pulled back. But as I erase these lines now, you're going to see something a little different, and that is in this bearish engulfing pattern, when you have a body that's red engulfing or eclipsing the previous body, and we see that on high red volume, that's selling volume. That tells us one thing: there's an 80% chance that the spiders are going to pull back. And like the diamonds, I'm going to set my target right close to that 20-period moving average, which will be right around 241. Now, if we look at the Qs, which is the NASDAQ market, known as the power shares, something very interesting happened. And yes, this is not an error in price. The NASDAQ market tumbled towards the end of the day. Let me show you the intraday chart. And you can see we opened up a little bit higher right around 11 o'clock. And then from 11 o'clock all the way down to the end of the trading day, it was nothing but sellers all day long. And that's a lot of pressure put on the technology sector, being that the NASDAQ market is usually made up of tech stocks. And so this is a very, very unusual and very powerful negative candle, again, being put on by the sellers. We hit the target price from last week right there. I'm going to erase all my lines, and I'm going to put a forecast that's a lot different than the other markets. I think the NASDAQ is going to come down pretty hard next week to test this support level. And again, this is similar to a bearish engulfing pattern, but look at this. The length of this candle not only engulfs the previous day and the day before that, but this day right here, today, Friday, we gave back everything that we gained in the last 2 weeks. So this is a very, very negative candle. And the other thing is that the stock closed below the 20-period moving average on super high volume. That's the highest volume we've had all year. So there's a very strong possibility that we're going to continue lower with the NASDAQ. Now, again, if you've been following along with the market, guys, my percentage of accuracy is the best in the world. And we record these, we archive them, they're in our library. All of our members can have access to them as far back as we go. So I don't tell you that we're accurate and then provide no proof. There's lots of evidence here that shows how accurate these candles are. So this is a caution flag to anyone who's long the market. If you are long and you didn't get out today for whatever reason, I would suggest that you use some protective stops or lighten up on some of the positions to minimize the risk to the downside. Now, finally, if we look at the VIX, this is the volatility index. A wonderful thing happened for those who are trading the VIX. And if I zoom in, I said we would move down from last Friday, and I put this as my target price on the low side, and then I said we would bounce. Again, this was Friday. Then we have Monday, Tuesday, Wednesday, Thursday, Friday again today. So we went down within pennies of my target low. And what happened? Today we bounced. And not only did we bounce, but today's high surpassed my target for the VIX. So I'm going to erase this right here for the forecast from last week and point out that we have a bullish engulfing pattern on the VIX that engulfs the 2 previous red days and beyond. So this is an extremely powerful signal. And again, bullish engulfing patterns work out about 80% of the time. And I've been tracking that for 35 years. So those are the percentages there. So my forecast for the VIX is that we're going to go a lot higher next week. Please keep in mind that the VIX is a contrarian indicator to the S&P. So it moves opposite from the S&P and how that moves. So if the VIX is expected to go up, the S&P is expected to go down, and that is one of the reasons why I said we would go lower in the S&P, because I had already looked at the VIX. And so we have a bullish engulfing pattern on the VIX, bearish engulfing pattern on the SPY. So this is a very, very interesting week, to say the least, with the NASDAQ really surprising a lot of people. And we're going to keep track of this next week, and I will report back to you next Friday when I update the weekly market report. So hopefully you're going to follow along and confirm the accuracy with all of our other followers and subscribers. And with that, I would hope that you're protecting yourself along the way. If you'd like to learn more about what we do at the Market Guys, just go to the Market Guys website, marketguys.com. Click on the video tab right here, and you will find videos that are called market shots. These are very short videos, about 7 minutes to 8 minutes in length. And I'd like to direct your attention to the engulfing patterns. Right here, I have at the bottom of the page the engulfing patterns right there on the left. You might want to review that so that you can understand what I've just said about the bullish and bearish engulfing patterns that we found, and that will help you hone your skills and help you with learning how to read the charts just like the experts do. So have a great trading week next week, and we'll talk to you soon. So long.